Hello and welcome to the latest investment market update. I hope that you're all keeping well. I'm Brian Morman, Director of Brunston Financial, and today I'm being joined by Mark Shields, Investment Director at Brooks Macdonald. Brooks Macdonald have been carefully selected to manage the Brunston investment funds, and using their expertise, the team analyse movements within the market and make tactical changes. Good morning, Mark. How are you?
Very well, Brian. Hope you are too.
Yeah, good. Mark, US markets have continued upwards. What's been the main drivers of this?
Yeah, Brian, you're absolutely right. The rally that started, kind of in the aftermath of the sort of Liberation Day tariff fallout back in April, has continued over the summer months, and kind of various global markets have reached all-time highs. The US is a good example of that. The UK as well, worth noting, but also places like Japan. I think there's been a few things that have been driving this, and in some levels it's quite surprising because we do still see quite a few risks on the horizon. But we have seen a bit of a surge of retail money into markets, which have been pushing those key markets quite a bit higher. We've seen a moderation, I would say, in some of the headline risks, or at least maybe that's the perception by some key investors and commentators, especially around areas such as the tariff threat and some other kind of other factors as well. Although we would probably argue that we still haven't seen the full impact of that sort of thing at the moment. But yeah, as you say, markets have continued to sort of climb that wall of worry and drive onwards.
So just thinking about markets going forward, what risks or opportunities do you see out there?
Yeah, I think our case, as I just alluded to, really is that we do still see risks. We don't think that, despite markets' performance, we don't think that a lot of these risks have actually gone away. We think that the ramifications or the fallout from the tariffs is yet to really been felt. We think that there's a potential inflationary risk in places like the US off the back of that, and also sort of an immigration crackdown. We feel that there's a concentration and valuation risk in certain markets, the key one again being the US, with the dominance of the Mag 7. They now represent 35% or so of the S&P 500. There's the valuation risk. Alphabet, as I'm talking to you day before yesterday, went through $3 trillion valuation. Nvidia's at $4.5 trillion valuation. There's a lot of sort of expectation baked into the prices of these companies. And if those expectations aren't met, you clearly run the risk of a share price correction in one form or another. So, we do think that there are some fundamental risks, some valuation risks. There are also some geopolitical risks as well. We despite what Trump has said, we've not seen a resolution to the situation in Ukraine. We've seen an increasingly bellicose Russia. We've seen tensions between the US and its allies, as well as its kind of, competitors, as it were, China being the most obvious one there. And we've increasingly sort of seen and, heard about a world that is more fractious and divided and arguably at risk than maybe really since the end of the Cold War. So, we really do think that there are a myriad of risks out there that maybe aren't being fully embraced by investors and markets at this point in time, and that makes us slightly nervous.
Yes, quite understandable. Coming more from the global point of view, let's talk about the UK budget up ahead. What do you see? It's all speculation, of course, at this moment in time, but any thoughts on how you see the markets and the economy ahead?
Yeah, I mean, as you say, it very much is speculation. Again, I think the budget is set for the 26th of November, I think, towards the end of November, so they pushed it out quite a way. And there has been a sort of series of kind of leaks, as it were, to sort of gauge what the likely sort of palatability of certain sort of tax changes are going to be. But I think that there is the opportunity here with some sensible actions to reassure investors, both domestically and globally, within the bond market, but also within the equity market, within the UK equity market as well, there is the capacity there for the powers that be to make some sensible changes, maybe not sort of entirely politically safe changes, but there certainly is the capacity there for those changes to be made, which would be highly beneficial, I think, for the UK market going forward, but also probably for the UK fiscal situation and the UK economic situation. The question, of course, really is whether they have the political strength to see that through in one level or another. And unfortunately, I think that is more questionable. And I think that we will have to wait and see what will happen on the day and what the immediate aftermath of that is. But yeah, at the moment we're sort of in wait and watch mode, and just sort of hoping that we avoid another Liz Truss mini budget style meltdown, which is kind of the worst case scenario, really. But we're reasonably confident that at least will be avoided. It's just a question of whether there's some more positive elements of things will come through, and that we don't really know at the moment.
Okay, Mark. So it's a watching brief and then action accordingly. Okay, Mark. Well, thank you very much, Mark, for that, and thank you for watching. As always, if you have any questions or queries, then please be in touch with us. Thank you.